Let me see if you guys can hear me. Okay, nice. Can you guys hear me? Just checking. Yes, thumbs up if you can hear me. Just trying to get everything locked in. Yeah, you can hear me. Nice. Okay. Trying to check. Sorry, my desktop is crazily busy. No, good. Okay, nice. You guys can hear me. Good. So, how's everybody's weekend going? Um, did it rain today? Are you enjoying your weekend? Say good, say bad. Let me know. Let me know in the comment section how it's going. Um, yeah, ready to hear. Okay, good. Me. So I'll be sharing my screen real quick. Going well. Oh, good. Let me see. I know that people will join in a little bit later. Okay. So I've been nice. I've actually been doing this. If you guys are checking like Keble socials or my socials, I've actually been doing the what do you call it, the inspection on some of our sites across Lagos. I think I'll do the same thing next week or 2 weeks from now. So we'll probably want to see your new updates for people that bought into some of our co-ownership projects. You guys will probably start seeing updates, like I promised, by second week of August. Some of our units are shaping up really well, so I'm excited to share that updates. Hey Kathy, I can see you. How you doing? Um, but let me kick things off. I hope the weekend is going well. Let me try and keep the momentum going. Um, we had like really exciting news today or this week. We got our real estate license done and dusted. We've been working on getting more real estate licenses across board. I think the next one we should be getting is a hospitality license. Then we'll also get like a real estate development license as well. Um, as we keep scaling and getting more deals done, more opportunities on the platform, I think it's only fair that we tend to scale our operations and provide some level of credibility for all our customers. Yeah. So I think we shared it across the community and socials and I think email. Yeah, email as well. So um, thank you everybody for being part of the journey. I keep saying my team that it's still day one. So thank you so much. Many more opportunities, many more announcements to come throughout the year. So yeah, watch out. Now, today we're going to talk about something important. I think today's conversation is actually geared towards people that are looking for some level of income but higher yield. And when I say higher yield, I just mean like higher returns generally. Um, Real estate is probably one of the most um, interesting, or when I say recorded aspects of people's portfolios that tend to yield exponentially, like really good returns across board. And for people, it can give you moderate returns, and that's fine. Like, real estate has been coined in such a way that people tend to say, okay, if I want a moderate return, it's physical, it's there, I don't have to think too much about it, and I'm okay with having my portfolio that is steady. However, we try to blend things a bit because we do see um, opportunities where investments can actually provide you with astonishing returns above what the market is currently providing. We see those investments right now in the market. And it just depends on how you're positioning yourself to be able to capture those returns, right? And when I say above market returns, I mean above the current inflation rate or above what we call interbank rates at the moment, which is, I think, covering around 20% at at this point in time. Any return above 20% is really good. I think all of our portfolios, and all the ownership offerings tend to yield above 30% across board. So really good returns that are stable, that are consistent, and you can essentially grow that number over time. Yeah. Now, if this is your first time getting to know about Keble, I want to say welcome. Keble is a global real estate firm. We help people buy assets across different geographical locations. We've had properties in Nigeria, in the US, in Dubai, in the UK. And our whole mission is to make sure that you can actually buy property with peace of mind in the most flexible way possible. Right. We have these sessions every single weekend, and we've been having it for pretty much the last 6 months. The whole aim is just to make sure that you are able to ask questions, you're able to interact, and you're able to sort of keep track with some of our offerings if you're interested in owning any one of them. Yeah. Now, let's dive into it. So the focus of today is just how do you earn high yield returns in real estate. And one of the reasons why we decided to talk about this topic is because if you look at global investment opportunities, right, you would see a shift generally when it comes to returns. Someone was saying the other day, I believe it was Tony Lumelu, he was saying that the kind of returns you can make in Nigeria, you cannot make it anywhere else in the world. Right. And you can see it slightly in the stock market. You can see it slightly in real estate markets. You can see it slightly even in alternative markets here, like our commercial papers are also really high yield. So generally, you're seeing that certain returns, they are slightly higher than what you probably get in any other market. Um, the other thing to also note is that Nigerian real estate or Nigerian stock market has is considered probably one of the highest performing stock markets in the last year. One of the reasons why that is so is because when you look at the FX, so when you compare naira to dollar rates, it's pretty much been stable. It hasn't been fluctuating as high. So you can essentially see that across board, if you put $10,000 into the Nigerian market, you're not expecting huge devaluations in your dollar investments. So essentially, just getting the same $10,000 or even maybe 9,900 and something dollars back. So it's not that far fetched. You can plan properly with your returns. Um, and as the FX becomes to stabilize, we are predicting that this is a trend that would continue within the next 5 to 10 years, based on what we are seeing internally. It just positions yourself that when if you're earning dollars, if you're earning pounds, if you're earning um, any currency, even in naira, there are opportunities that you would not find anywhere else aside from Nigeria when it comes to yield, when it comes to income growth, right? So I think the whole conversation today is based on what we can see now, based on the markets and projections, you're able to sort of place your bets very heavily in certain assets that can allow you to grow your returns, especially when it comes to real estate in Nigeria. Yeah. Okay. So what makes a real estate return truly high yield? I mean, there are a couple of things. You want some combination. There's not really one thing. You want a combination of, you know, vacancy, operational costs, understanding. You understand, construction delays, inflation, currency movement. I mentioned that earlier. Property management, exit, and resale risk. Um, High yield is the return that remains after reality happens. So you want a situation whereby your investments are able to yield returns um, across time and across different variations of the property investments that you're making. And all of these factors are essentially considered in your investment portfolio. So, for example, I like to say that when you're thinking of some of our ownership offerings, we mentioned that, hey, we're expecting that some of these properties are only booked 150 nights in a year. right? So essentially, half of the year, we don't even if you make money, then that's fantastic. But essentially, we're baking in that half of the year, then you don't get any bookings, right? Or we pre-bake the cost, operational cost at 40%. So you're essentially thinking that, hey, okay, at the end of the day, I'm going to get, 60% of my income netted, right? And that's what I'm going to take home. Um, there's some times that I was doing some sites visit the other day, and just looking at the construction that is happening around the island side. There are slight delays there because of the rain, and we had to bake that into the conversation and say, hey, you know, some of these projects we're going to bake in an extra 30 to 60 days for the project to be completed at the end of the day because of the delay with the rainfall. So I think that all of when you're thinking of high risk real estate investments, you're looking at all of these opportunities, a lot of the options to be able to make informed decisions at the end of the day, right? Yeah. What are you trying to achieve? So um, I wanted to understand what worries you the most when it comes to investing in Nigeria, right? Um, and you can type A for documentation, B for developer delivery, C for vacancy, D for management, resale, understanding of the numbers, right? So depending on where you are, you can actually put down A, B, C. I want to see what you guys think right now. What are your current worries at the moment? Thank you so much. I'm waiting for your response. Okay, B, so developer delivery. Okay, E. So, okay, that's one, two, three. Okay, resale. Okay. So on the resale part, I had someone reach out to me the other day, and one of the major pain points is developers are good at actually buying properties. Like they are good at convincing you to buy properties, right? So okay, he make this flexible payment plan, 6 months, 12 months, and that's good. I think the hardest part is actually selling. And as someone that's been on both sides of the conversation, like one of the hardest things I've seen people actually face is they've bought this property, but they heavily overestimated how long it will take to sell the property, right? One of the things that we try to do early on is if you buy a property on the Keble platform, you do not have to worry about selling it. Like you have Keble as the platform provider that will allow you to sell it, even if you don't know anybody. And my our experience is that most people don't know anybody to sell the property to, right? Most people don't even know an agent that is willing to take up that role, right? And I think one of the core things we tend to do really well is to say, hey, whenever you buy property, we are in charge of making sure that we can help you develop, we can help you resell at the end of the day. So I think that those are valuable things. Let me see. Someone said E. Okay, resell. So just I just wanted to touch on the resale. Documentation are pretty easy to verify. Like generally, like you from a documentation standpoint, like you don't it's when you're looking at a high yield thing, I mean, that's legal and it's very easy to check if something is off with a certain legal document, right? I think what needs to be looked into more is like, okay, what's the track record, right? If someone is involved in certain projects, you want to understand, is this their first project? Is this their second project? Where are they heading to at this moment? They have more projects in the future. I had a lot of customers ask me, what's the pipeline looking like for the year, right? Because they're just planning for whatever investments they're making. So I think that's valuable. Thank you so much for participating in the conversation. Yeah, so Nigeria has demand, but demand alone doesn't generate income. Right now, Nigeria is already over 50% urban, and urbanization continues to increase housing demand. So we're already seeing that right now we're at a situation whereby there is a growing population, there's also a growing demand, especially when it comes to rental yield. When you're investing in property, that's why we focus a lot around Lagos. We're doing something in Abuja now. We're looking at Port Harcourt at the moment. All of those markets, they're they're experiencing a high degree of urbanization, right? And you want to be at the forefront of that, riding that wave. The reason why we tend to ride that wave is that we typically do not want to be the ones creating that momentum. You want a situation whereby the momentum is there. You obviously you have the foresight to pick up on some of that, and you're able to ride that wave properly, right? So yes, there are opportunities there, and they are in different markets. In fact, someone was mentioning to me that I should look into. Um, I think we should look into Kano, right, northern Nigeria. I have, if you're well conversant with that market, and I would love to speak to you. So I think those markets are interesting. They have their own nuances, but like every single market, there's some challenge that you if you figure out how to manage the risk itself, you're able to make really good returns over time. So like I said, like you're looking at, it's not just about, not all returns are the same. So um, most times people tend to focus on gross rental yield, and they forget that there is net. So you have to account for expenses across board, so it's always important that no matter what investments you're making, um, expenses are a big a big chunk of making those returns generate or grow, right? So for example, someone that is running a shortlet and they're telling you that, okay, you're going to generate 37 million in a year, but that's not 37 million in your pocket, right? You have to pay for the property manager, for the accountant, for the marketing, for the cleaning, right? All of those components are involved to make sure that it keeps generating 37 million and maybe 40 million the next year. And I think that that's useful when you're thinking about how to generate proper returns across board. Like I said, like gross income isn't just income. It is, we spend a lot of time considering a lot of factors. So like power, cleaning, maintenance, insurance, security, marketing, and the likes. And we from our experience, we literally cap it around 40% that covers all the operations, right? So if you bought into Declan, Regal, and you have your own maybe contract of sale or deed of assignment, you typically see that we say, okay, 40% is meant for operations, right? And 60% is meant for landlords. The reason for that is this conveniently covers for all of the issues that can occur. Sometimes it might not be enough, to be honest, but it should be able to cover for most of the issues across board. So that's important. Um, oh yeah, like we said, like when you're thinking about like rental yields generally, you have some of the best rental yields are in the US around 6%, 5 to 6%. For Canada is around 5%. United Kingdom is around 7%. And these are like gross rental yields. So when you net it off, the story is slightly different. However, when we think about Nigeria, even Nigeria is around 3 to 5% when it comes to just normal rental markets. Now, those 3 to 5% is for states like Lagos, Abuja, and Port Harcourt. If you're looking at states that are outside of that net, right, you're probably going to see around 3%. So states like maybe Enugu would have around 3% year on year, right? So you're thinking of deeply when you're thinking about managing your portfolio. You want to understand what markets, how much returns am I going to get, and does it match up with inflation? For short-term markets, it's slightly bit better. I think you're probably going to be getting around 10 to 15% on average every single year. So that's slightly better across board. I mean, one of the things that you want to figure out is there's always a benchmark. So, like as you're investing in every other thing, whether you're investing in the stock market, whether you're investing in treasury bills, or you're investing in some bank bond, you want to be sure that your investment is producing above inflation rates. So, for instance, you want to be sure that headline inflation right now is around 15%. So let's just say 16%. Every investment right now should be yielding roughly 20% on your portfolio every single year, right? So if it's not, that means probably is maybe a lower risk investment. So something like treasury bills would fit the bucket there. Maybe bonds, maybe giving you maybe around 17% year on year. right? The stock market obviously is quite risky. So if you're someone that is maybe risk adverse, you probably don't want your entire portfolio to be in the stock market. You want to diversify across board so that you're able to manage the waves. Because there'll be some times that there'll be drawdowns and where your portfolio is down by 5%, 6%, depending on how much you bought and when you bought it, right? But you want to make sure that you don't over over index yourself in every single market, even in real estate, right? You don't want your entire portfolio to be in real estate. You don't want your entire portfolio to be in the bank, just making sure that your portfolio is a bit more balanced across board. Yeah. So obviously, when we're talking about high yield, you should be interested in making sure that for high yield investments, be aware that it has high risk, right? Every single investment has risk, but the way to understand the risk itself is with the yield. The higher the yield, the higher the risk, right? Now, are there deals that play in the gray area of that? Yes, but like from every single investment that we've probably ever done, the earlier we are in the deal, the higher the potential. So, for example, if you bought into Aviation City, one of our land projects, right, the expected capital appreciation for this year is projected to be over 30 to 50% this year. The reason why that is, and it's sweet for most people, but the reason why that is that you've made highly risky bets in that place because it's still early, right? So you're still in the earliest phase in that project. Now, people that come in at that stage or at this stage in time are able to get, that's why you see someone that bought property of 1 million and they're selling it for 10 million, right? The reason why that exists is that that person took educated bet or a risk, and that return is the compensation for that risk, right? The reason why Elon Musk is the richest man in the world is because he's able to take risk, and those risk, you see that in the stock portfolio is the businesses that he has created. Nobody talks about the time where he's sleeping in the factory or the time where they're about to go bankrupt, right? Those are the things that are high risk, right? So across is a what do you call it? I think law of nature. Like every single thing that has some underlying risk is expected to have an underlying return that matches that risk, right? So that's why when you're buying into a construction project, it's slightly cheaper, right? Then when the construction is fully done, you'll see that the price has gone up, right? The people that bought it off plan took a risk, but they are being compensated when, you know, in terms of lower cost for them, and they're being compensated on that front. The people that are buying it when it's fully built are taking less risk and essentially less return for themselves. So I think everybody needs to understand that if your goal is to search for higher returns and you're not matching it with higher risk, you're not going to get the best kind of outcome. You need to be aware of what you're looking for, right? And you need to ask the right questions as well. Yeah, so some locations outperform the rest. So real estate value follows demand. Like I said, we always want to ride that demand, right? As much as possible. We are looking for almost every portfolio we have in the platform. We are looking for certain things that we don't want to stress when it comes to rental income. Like I, right now I was speaking to a project, and if you bought into Cardiff, for example, Cardiff has is a 44 units resort location that we're building, right? Boutique hotel. And one of the things that we wanted to do early on is to make sure that we are not thinking of getting bookings. So bookings essentially outsourced to agencies, right? To individuals that are trying to do what you call vacation rentals. They're trying to think of experiences for their customers. Essentially, that is handled. We just make sure that there is an infrastructure to bring people in, right? From the train station to the resort, there is a bus that carries people from point A to point B every single time. So it's very important that you're thinking through how the experience would be like, and you're not doing so much because you cannot create so much demand. You can't create that. That's the government's job. That's infrastructure. So wherever the government is putting some level of infrastructure, you're just essentially going there to participate or benefit from that infrastructure, right? Yeah. So, for example, there are different levels to what I think high yield equation should look like. There's a shortlist side where you're seeing like there's nightly bookings. Um, Obviously, once you the number of bookings plus the number of nights, when you subtract the operating costs, that's what investors get at the end of the day. For land, it's quite simple. There is the price, the future price you're going to resell, and there's also the cost of holding it, right? After that, that's what you call the gain of holding the asset. Now, I think when you're thinking about risk from a high yield perspective, there are so many things to consider, and we touched on some of them. There's the demand side. So you do not like try not to think so much about demand because there's so much to consider in just managing the property that you want to be sure that demand is on autopilot, right? So we tend to think of whatever location we're in. For example, Bradford. Bradford is next to Unilag and what do you call it? Yabatek, right? So we already know. And when we are buying a property there, we didn't want to buy the most expensive property. We wanted to buy a property that a student or maybe a researcher can stay there for a night and they can pay 30 to 40K every night. Very simple, right? So you wanted to figure out what markets would work there. Then we have a property in Ikate, Lekki, that the minimum there is 150K per night. Different audience, right? So you want a situation whereby the demand is matching with who is available there and you're not trying to force it, right? Then obviously there's a pricing risk. I tend to lower my prices um, in the first 3 to 6 months so that bookings can just flow through. And the reason for that is that I want people to start experiencing rental income as quickly as possible, right? So I think that's important to get through. There's obviously execution risk. Execution is just delivery of projects. Like it is the hardest thing to do, but you want to make sure that you're able to execute and bring the projects to life from ground floor to first floor to furnishing, right? Operating risk, which is when people buy property, they're constantly thinking of how do you manage the property, or the property now becomes their second job. I To be honest with you, I've been in that situation where you buy a property and you're now the manager, you're now the landlord. It's a terrible thing to be. If you are able to outsource it, right? I think one of the key things that we do in Keble is that it's a turnkey experience, so you can actually buy and just leave it and we manage it for you, right? That removes a lot of headache. You don't want anybody calling in the night telling you that, oh, the pipe is leaking, or Jenna spots. Those experiences are not great for anybody, right? So yeah, those are the things that to consider. There's legal risk and there's also liquidity as well. Now, when you're looking at all of the projects, for example, um, for Cardiff, the reason why Cardiff is giving you, I think, in the Cardiff is yielding over 300% in the first 3 years. The reason why that is so is because Cardiff is a kind of deal that starts off from you're building like infrastructure, you're building road network, you're building, units of, boutique hotel, and is a 2 to 3 year project, right? So everybody that is waiting that long is sort of being compensated for that wait, right? There's Declan, right? Declan started off as you're paying for I think 450K or 400K. Right now you're paying 500K. The reason for that is that right now when people were buying it, they were buying it before for foundation level. Now, last time I checked, it's already we're at the roofing stage. So whoever is buying it now, they're probably going to start earning income before the year runs to an end, right? So all of these things are important to allow you to understand, oh, the level of return I'm going to get is really added up with what stage is the project and the timeline for how you're waiting for that project. Those things are important to understand. So yeah, I mentioned on Cardiff Polo. So this is land trust. This is what we call income plots. The whole idea is that you're able to own the property or the landed property and we bring in what we call financing for that property, and we bring in development expertise. So we are building like 44 units of boutique hotel units in this location, right? And the whole idea is to build like a resort style. What is in this resort? There is horse riding. There are different sports centers. There's a lot of greenery as well for campfires and the likes. So it's just an experience that people just want to experience something other than just staying in their houses or just booking a shortlet, right? Now, Cardiff essentially is unique in its own way. And I think from a yield standpoint, you're probably going to be generating in the first year, you're probably going to make back your initial capital once it's fully launched. Yeah. It has a unique way of blending because you're not just buying land, you're buying land that essentially would yield cash flow from those hotels, right? So I think it's a unique blend of owning land with the ability to generate cash flow for yourself, right? Declan. We've spoken about Declan a while back, but it's still available if you're interested in buying Declan. Declan is probably one of the most expensive assets we have on the platform. A slot is going for 5.4 million, but you can spread the payment for 6 months, right? Sorry, for 12 months. And it's due to be finished this year, right? The whole idea is a two-bedroom apartment in Ikate. Right now is going for 150 million per night. Also, the location is not flood prone, so that's why I like it. Um, Now, in terms of the jurisdiction, I think gross yield in this axis is between I think 37 to 38 million, right? Every single year. What everybody is going to be distributed at the end of the day is around 22 million. So for each slot, you're essentially generating roughly, 400 to 600K every single year net to you, right? And this axis sits at Lekki Phase 1 to Aja axis. So very, very buzzing commercial area as well. What makes it high? So this is a good question to ask. Why is this a high yield investment? Well, people that buy into it are essentially buying it off plan. So the cost to income is actually quite favorable. Now, it's also a C of O property. We're also providing insurance coverage. You're also getting deed of assignment, and it's easier to, from an exit point of view, it's easier to exit from the property as well. One last thing, if you're buying some of this co-ownership, you always know that you're is going to come with some extra utility at the end of the day. So the whole idea is that you're not just buying something and watching it in the screen. You're actually able to visit the place, use the place. So I think for Declan, you have every single year you have a complimentary night stay. So for someone that is traveling, for someone that just needs it for a birthday, for someone that wants to relax every once in a while, you have that option. And as the co-owner, you're able to get discounts for when the prices are slightly lower. Yeah. This is Phoenix, right? Phoenix is located at off Freedom Way, Lekki axis. So this is closer to Lekki Phase 1. Oh, okay. No battery. Yeah. Thank you. So this is closer to Lekki Phase 1 axis. You had two options. I think it's fully sold out now, but you have sole ownership and co-ownership. This property is fully automated. It has solar panels. It has high-speed internet. It has a gym, swimming pool, and the likes. So it's packaged really well for upward mobile individuals. Okay. Now we do have sole ownership and co-ownership offerings. For sole ownership offerings, one bedroom, I think this is sold out. To pay for is 180 million, and every single year you're netting in around 15 million every single year, at least in the first year. And for three bedroom, it's yielding over 25 million net to the owner every single year. So depending on where you are, we have the co-ownership offering for Phoenix, and if you're interested in this ownership offering, we have flexible payments for up to 12 months for you. And this is the co-ownership offering. So People ask me what's the difference between co-ownership and sole-ownership. I think the major difference is for sole-ownership, you're owning the entire unit, right? For co-ownership, you're just participating in the ownership of one singular unit, right? And each unit has a limited number of slots. So once the slots are filled, no one else can buy into it. And most of the time, I think our slots on average are 80 to 90%, sold out, before handover date. So that's really good. Now, the we've spoken about rental yields and cash flow, which is good and important from a high yield perspective. And we've also spoken about how to do the what you call the income plot side. I think people also forget that land is also a unique way of you know creating some high yield for yourself, right? Um, Especially land has a that is intentional, that has some level of value added to it. So not every land is the same, but I think if you when you find the right opportunity, you should hone it, right? Aviation City is one of those properties that I think probably one of the fastest selling lands we have on the platform. It has a really good price entry. So if you're interested in owning something that is in the axis of an airport axis, I think it's really good that you tap into this. One of the things that was shocking when we listed this offering was when we went to the inspection site, um, we saw a huge chunk of the area allocated towards Chinese businessmen, right? Remember, the airport here is a cargo airport, it's an international cargo airport. So the plan is that things from China, you know, things cargo from different areas from Nigeria can go there, and from China can come there as well. So people are positioning themselves, especially the Chinese. They are positioning themselves. The Obas are started selling properties. They're not even selling properties to their fellow Nigerians. They're selling it to Chinese men because Chinese are willing to buy at any price. So what we're doing is to see one of the reasons why I tell people that this location is really important is that once if someone else outside is seeing value here, I think it's also unique that you also tap into the value and make sure that you're part of it, right? The also unique thing about this location is that it's mixed use. So if you're someone that is thinking of commercial, the opportunity is there. If someone that is thinking of residential, the opportunity is there for you as well. Now, I think one of the biggest theses for buying it's not a no-brainer. It's pretty straightforward when you buy a place next to an airport, right? There are tons of benefits that happen aside from frequent travelers coming in and out. There's just businesses coming in, people settling in, workers that are working in the airport settling close to that area as well. So there's so many second order effects that happen as a result of you just participating in that ecosystem, right? So airport link infrastructure benefits you, industrial corridor expansion benefits you, even Lagos to Ogun states spillover from a population standpoint also benefits you as well, right? So people that want to frequent travelers that want a location here that they can stay without stressing themselves, and also a location in Lagos can use this axis as a residential, um, will I say, stable location for themselves, right? And the reason, obviously, why it's high yield now is because most of the people that are buying are early movers, right? So early on, I can remember a property that we bought at Imota District. We bought it very early. I think the minimum price at that point in time was around 500 to 800K. Within the first year, it grew by 80%. And the reason for that is that more infrastructure came in. We perfected the title in that land, and a lot of people were able to see that growth on their own portfolio. So I think that's a valuable insight when you're thinking about locations like this. You just want a situation whereby you understand what is driving it, and every single property we have, there is always something driving it, right? Yeah, obviously, we have aviation. We have multiple payment plans. We have a outright 6 months and 12 months plan, and we have in different square meters. So you can decide to own 300, 500, 1.5, and 3,000 square meters. This is also a long-term investment. So this is something that you're thinking 5 years, 10 years down the line, right? Yeah. So Obviously, returns are not the same. Like each of them requires some level of understanding, right? For example, Declan will start earning income this year, right? Phoenix is next year. Cardiff Polo is in the next 2 years, right? So each, and if you notice, the returns speak based on the yield speak based on the timeline you're holding or the stage that you're coming into, right? So a lot of things come into play when you're thinking of high yield. It's not just, oh, I want a higher return. Higher return comes with, timing risk. It comes with also, higher risk as well. And then there's aviation, right? Aviation is focused on no yield, but the way I look at it is we're planning to build in all of our land offerings, we are building sort of a mini cluster of estates for the landowners. So if a place becomes opening more and more, we can raise financing for that project, whereby it can even benefit some of the landowners that are interested in participating for a JV. So we can do multiple complexes on that particular land, and you can benefit from just being part of a landowner without doing so much. Yeah. So, how to identify high yields? I think the major thing to focus on is, would is who is going to pay. So, like, why will people pay for this, right? Um, you want to understand the future end user, and that's important to understand if it's worth their own time, right? So like every co-ownership offering has, when it comes to their rental income, we have a case study for the likely people that will pay that rent, for the likely people that would earn from there, right? The likely people that will commute in that particular location, right? So it's very important that you know the end user at the end of the day. So we have I, which is income after expenses. That's net income. You want to know at the end of the day what is coming to my account, right? How much am I going to make at the end of the day from this project? You want to show some comparables like evidence. We spend a lot of time educating people. This is part of the evidence building, right? I think for every offer that we have a dedicated home circle video that just breaks down the offer itself, so that you can go back and revisit and watch and see how that works. All right. We spoke about liquidity and spoke about legal rights. We spend a lot of time making sure that it's easier for you to sell. At the end of the day, the only way you can, especially for land ownership, the only way you can exit is when you sell, when you do a joint venture. Our preference is that you do a joint venture, right? So because there's a higher ceiling in terms of what you can actually make from the deal. Um, and you want to understand the downside scenarios, like what is the worst possible thing that can happen for all our projects. When I tell people is that the worst possible thing you have is that you have land that is just sitting there, or you have a building that is just there, right? These we've mapped out scenarios for all the co-ownership offering, and we said even if shortlet is cancelled forever, like, and that's kind of scenarios that we tend to bring in the investment committee. Like even if the worst case scenario is that shortlets don't exist anymore, we can still rent out this apartment at a really good price, right? So I think that these are scenarios that we tend to look at and we tend to understand before we even push out those opportunities on the platform. Yeah, so not every high yield opportunity is for everybody, right? So you want to be sure we do this consultation. That's why I say talk to your account manager, request to speak to someone in the team. We have these sessions so that you can, ask your questions and make an informed decision. But every opportunity is designed for slightly different reasons, and slightly different, sets of investors. So it's important that you're able to know who you are. And we do have this test. I think we should do that test more often, or probably every quarter. We just say, okay, guys, take this test so that you know kind of investor you are and the kind of property that matches that investment. Yeah, and everybody understands what Keble is really about. Try to make point the core thing that we do. We spend a lot of time on due diligence, right? So that's important to us. We want to make sure that the documentations are right. So when you buy property through us, everything is sent to you, right? So that you're able to review and get back to us. Um, we also make sure that properties are managed. Every single property, whether it's land, whether it's a property, we manage it for you. So the land is managed to make sure that there is no encroachment, to make sure that it's constantly clean throughout the year. right? If you're building something on it, will help to manage that cycle as well. So from end to end, you're able to trust a partner that helps you start from point A to the end. Yeah. Now, I think we have a form. If you're interested in any of the properties we mentioned, if you're interested to speak to somebody, I think it's important that you fill the form, and we're open for questions as much as possible. Right. So I think one of the major things to highlight is demand is important. We do not go anywhere. It's based on whatever demand that we have, that we're able to pick the right locations and make sure that you're riding the wave and you're not engineering the wave for yourself, right? Let me see if you guys can just give me a sec. Okay, the link. Let me try and drop the link here for you guys. Give me a sec. Okay, so that's the link. So if you're interested to reach out to anyone in the team and you want some more clarity, also we have an email that you can send us a message and we'll be able to sort that out for you. Any questions so far? I think we've been able to cover every single thing. Open to questions at the moment. Thank you so much, guys. Also, I think in the description is also there. So if you're interested in knowing more about us, the link for talking to any of the agents is also in the description as well. And let me see if I can. If you want to follow us on any of the social media platforms, I think this would be helpful. Let me see. So a bit more clarity on co-ownership, the number of co-owners and the exit plan for subscribers. Great question. So it's important to know that all of the co-ownership for each property is okay. You mentioned for Declan and yes. All right. For Declan and Phoenix, I think for Phoenix we have 20 slots left, right? For Declan we had 50, but roughly I think half of that has been taken. So we have, let's say, roughly around 20 slots left there as well. Right. In terms of you can buy as many slots as you want. So the average slot that people buy is actually two, three, but you can buy one slot, and there's no issue with that on that front. In terms of the exit plan, there are two exit plans. One is the one that you create for yourself, which is you can decide that I want to sell anytime I want to sell. So that's on you, right? The other one is when Keble introduces a full owned sale. So we are buying off everything, right? That happens every 5 years, right? And the whole idea is I want you to actually benefit from it and make sure that you're able to, will I say, benefit from the rental yields and use it to your own advantage, right? Before any major person is coming to buy it for you, from you guys. So the exit plan is quite flexible. You can decide to sell it on your own end, um, and we help to facilitate that sale, so you're not like lost in the whole process. Or every 5 years, we introduce what we call like a bulk sale, right? And that bulk sale is all the co-owners, 70% of the co-owners have to agree for the bulk sale before we introduce it to the market. And if 70% of you guys say, okay, yes, we want to exit from this property, that property is released back into the market for people. Some people want to hold on to the property for life and just get the rental income, and that's fine. Like, that's okay. Okay, sorry guys, technical issues. I'm sure I've been answering on the comment section. So I hope, Ahmed, your questions have been answered. Yeah, we do. If you have land in, if you're interested in land in Lagos, we do have those options. But if you're going to buy land in Lagos, I would suggest, especially if it's C of O, I would suggest that you have a budget between, I think, 20 to 50 million. If you're going to buy like a really good land in Lagos, that should be the budget, right? Most of the budget opportunities in Lagos are around that price point if it's a C of O property. Yeah. And if, especially if it's like in a really good location. So if you're ready to explore that, we're good to go on that front. Awesome. Any more questions? I know that we had like a technical interruption, so sorry. If you're interested in knowing more about Keble and we want the offerings to be live, I think I shared the link. Let me do that again. Let me pin it actually. I can pin the message so that you guys can see that there. Awesome. Any more questions? All good. All good. Nice. Thank you so much. So I pinned the form. You just have to fill it, then we'll reach out to you to make things a bit more easier for you across board. Awesome. So just a quick recap. And again, thank you so much for your time. It's typically 1 hour. You can ask as many questions as you want, but the whole idea is just to make sure that you're informed on what kind of yield you're looking out for, which opportunities we have that will give you the yield that you're looking out for, and how do you grow that as you go along, right? If you have more questions, if you want more clarification on some things, we have that available on the platform. So the link is already tagged, so you can just click on it and we'll give you a call within the week and sort of schedule something that would be beneficial for you as well. All good? Awesome. Once again, I want to thank everybody for the time and really appreciate everyone taking our time to listen and talk and ask questions. See you guys next weekend. Take care, everybody. Bye.